Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go over ratios, show you how things are interacting with each other from asset to asset, show you what the valuations are in relationship to each other. And again, just to give you a brief kind of overview of what ratios are, is we're comparing an asset to an asset, we're dividing it by each other, and comparing it to history. And what that tells us is relative value in relationship to history. Whenever you have the ratio either low or high, depending on which area it's in, will determine what's expensive and what's cheap. Because when you look at things in history, all you're going to do is you're going to do a comparative analysis and say, is this cheap or expensive in relationship to history? And then you'll just start pricing it against other things at that time to see what the relationships are. So if you can look at all of the undervalued assets in the world, and you focus on that, and then you see how they're interacting with each other, it tells you something. It tells you if commodities are outperforming gold or other assets, that we are in a commodities boom. It tells you that money is flowing from one sector into those sectors. That's how they are becoming more overvalued, or their valuations are changing positively for them. So behind me, I've got some ratio charts. We're going to take a look at kind of the commodity to S&P, I should say commodity to stocks ratio is usually what I say. We're going to look at the Dow to gold ratio. We're going to look at some other ratios in terms of commodities themselves. So let's dive in. I'll give you what my opinion is, financial opinion, that's all it is on this. And what we did in the CRB to S&P 500, I'm kind of zoomed in here, is we broke the pattern here to the upside. We're coming on back and we're going to do a back test. And we've been going quite strong on this pullback here the past couple of days. So remember, that's a relationship between commodities and the S&P 500. We've had a pretty good pullback here. We're coming right to its retest of the breakout line here shortly. We need that momentum to slow down and hold. But even if we were to come back into the pattern, I think we'll be all right because we've got a massive downtrend break. But that's where we're at. We're coming back for the retest. And looking at the Dow to gold ratio, we're starting to create this ascending wedge pattern. It's coming up into the tip of that pattern right now. I'd like for this to break to the downside. So what I suspect would happen is the Dow kind of to go sideways, maybe even a little bit lower, while gold goes higher. What that's going to do to the ratio is compress it to the downside, signaling an outperformance of gold and commodities. Now, I know everyone in this world, I'll say Federal Reserve and all these other things, they're going to fight this tooth and nail. They're going to try to fight this. And we could have a blow off top where the Dow runs and gold kind of remains held back a little bit. It's possible that that could happen. But because, I mean, we're very early in the expansion phase of real estate. That money hasn't flowed through the system yet. So we could be a little early. We could be a year early, even, for a big move in gold and silver. Just getting you mentally prepared for it. Now, looking at the big picture view, whenever you have these ascending wedges, this is a huge ascending wedge, and we broke to the downside of that ascending wedge. We're coming up and we're creating another ascending wedge, which to me, it looks like it's a double top. So this wedge up here that we're looking at is this wedge on the right-hand side. And to me, it looks like we've got two ascending wedges where this is going to break to the downside and compress back down to these levels way down here, or even maybe lower. This was the last commodity bull market. That's what the Dow to gold ratio looked like as we were compressing downward. It bottomed in 2011. So I suspect that this is going to come and pull back at some point. Hopefully very soon. And this is the big long-term picture of the commodity to stock ratio, the downtrend line break, us moving on higher. I was just zoomed in on the one above. So that one everything looks great. Everything looks good. And if we can compress this all the way back to the top of this channel back in the 2008 area, it's going to be a massive commodity bull market because we're coming off bottoms that have never been this low in the ratio. Now, if commodities are going to outperform, we should see the commodities start to outperform gold. And what do we see? We see exactly that on oil. Oil's been compressing its ratio all the way from a ludicrous number above 100, and we're down to 22.76. What I'm curious to see is if this ratio continues to compress for oil, being favorable for oil downward. It means that we've broken out of this channel of the gold to oil ratio. And if we've broken to the downside and we continue to compress, it means good things for a commodity bull market that's coming our way. It's going to be an inflationary period. Now, we very well could break back up into the channel again for a while longer. Because remember, we are very early in the expansionary phase of real estate and that money getting into the system. And we very well could see a problem between now and then. But I think that the homes are going to have to be built at some point. It is a structural deficit driven by demographics where we are short homes, and we are seeing home prices rocket higher, and we're seeing rent prices rocket higher. There is a shortage in homes by using those two metrics. And that inflation will come into the system eventually. Right now, we're on the sugar high from all the money printing that the Federal Reserve has done. But it is showing its marks in the commodities and in the ratios. Here's the platinum to gold ratio. We've broken out to the upside of the downtrend. We're coming back. We did a retest, and we're starting to move higher. I suspect that platinum will outperform gold. We are at ludicrously low ratios for platinum in relationship to gold. They haven't really been this cheap in history ever, especially down here at 0.35 and 0.4. Those are just ludicrous valuations for platinum. Platinum and palladium included with it. They've had chip shortages in cars. It's kind of reduced that demand for palladium and platinum in the short term, but we are not in a recession. We had a shutdown, which means the demand is still there. We just need to have the commodities and the supply chain to deliver all this stuff. I think this will eventually resolve upward quite dramatically over time. And when platinum's outperforming gold, it means something. It means that the commodity sector is going to outperform stocks. That's what this ratio is indicating. And if you notice, we have higher lows down here, and now we just have to break this higher high and close above it for a new uptrend. So the ratio is still in a downtrend. We are putting in a reversal pattern, and I think we'll put in a reversal pattern here over the next year. And then we're going to see an outperformance of platinum over gold. Here is copper to gold ratio, and copper to gold ratio is also breaking to the upside. We had a very good outperformance of gold to the downside, and copper has outperformed gold here recently. Here's the downtrend line. We broke it. We're kind of, I will say, resting above. I don't know why that went away. It's resting above the line there. It's resting above the resistance line, and eventually I think this is going to resolve itself upward a little bit for the copper to gold ratio here. And then looking at the uranium pound of U308 in gold grams, we are breaking to the upside of uranium outperforming gold here recently as well. Notice that all these commodities are outperforming gold. It means something. It means a commodity bull market's coming. That's what this means. All these charts added together means that a bull market's coming. Uranium is still at ridiculously low prices, or I should say values in relationship to gold. And we're just starting to break up to the upside. I think a huge bull market's going to be coming in uranium, and it's already started. It's underway, just started. So you're very early to this mix. So that's what the ratios are at least telling me. And the reason I like using ratios and this data is it's clean data. It's you're just looking at data, looking at the charts and graphs, and it's telling you what people are preferring over time. They are preferring to invest in commodities at the moment. Now, we are kind of at the top of we'll call it the stocks. I think we're trying to peak out at some point here. We don't have rising interest rates, I think, at a level where the money's really start to rotate over. But I'm watching that. I'm watching those interest rates. And the interest rates right now, we are above a resistance line. We're kind of chilling at the top of it, of the breakout. We broke out. We're pulling back a little bit, and then I think we're going to move on up. And we just have to be patient. We have to be patient. We have to watch the real estate market. And the real estate market's doing very well. I know a lot of people, they're very afraid of the real estate market, but our inventory is super low and our days on the market are moving very fast. It means the inventory is in inventory and it's moving. And we very well could increase our inventory levels some and still be in an incredibly bullish real estate market. So even if inventories go up, if you see a percent number of inventory increase, it's not necessarily game over. And I know other channels, they really try to push the scare button, the fear button on real estate, but I don't see it yet. I don't see the bearishness. I mean, yes, we're getting a little bit more inventory. I agree with that, but the days on the market and how much inventory we have in total is still at incredibly low levels. So I think that the real estate market's going to continue to go up until we get inventory, until the days on the market go longer. These things all have to shift, and they usually take about a year or two to really start to shift. If you're looking month to month or month over month, that's of last year, that's what I prefer to look at, is comparing the seasonality. You take the seasonality out, you look at October versus October of 2020. And that's what I focus on. And if the numbers continue to get better, we are in a bull market for real estate. It is going higher. And very little, it's hard to change that bull market. The momentum's in motion. We have 5.5 million home deficit, according to a lot of the articles that I read and the data that I've seen. We're between about 4 and 6 million short, somewhere in that range. And that just doesn't resolve itself over time. Naturally, you have to build your way out of it. And that's where I'm looking at the expansionary phase of real estate. You got to build your way out. And all of these charts behind me, these ratios, are signaling, they're giving me signals that the commodity group is going to outperform. We can see it in the chart patterns. We can see it in these commodities. We can see it in uranium going up, copper outperforming, platinum outperforming, oil outperforming gold and compressing to the downside. And eventually, this entire commodity complex will get priced higher through the price of gold. That is your inflation aspect. Inflation drives gold higher. The ratios compress from supply and demand. That's how this stuff works here. And we're going to see compressions. We're going to see copper be used in copious amounts for renewables and grid infrastructure packages. We're going to see a bunch of uranium power be put in place because it's the cheapest, cleanest, best baseload power I think that humans have found. And we're seeing that in the chart just starting to turn on up here. It outperforms during commodity bull markets. And if this is starting to outperform, we are entering, therefore, a commodity bull market. So everything looks good in terms of the ratios. That's what it looks like. What would I be doing right now? I would buy physical platinum. Physical platinum is the best deal, I think, at the time. And I think uranium's a really good one to look at. Oil's kind of bumped up its head on some resistance. It's going to pull back a little bit, and then hopefully we can run again. And we may see a little bit of a cool down here between now and we'll call it the depths of winter in terms of coldness. But maybe not. Maybe it'll keep running. So I'm of the ilk that you get in there, you hold your shares, you find good companies, and look at my daily analysis for the companies that I go over. I hold them, and I'm going to ride them through this entire ratio valuation reset, so to speak. From low values to high values, I'm riding them all the way higher, as far as we can go, as far as the market conditions will allow us to go. Market conditions are the real estate prices and that expansionary phase of real estate. If you guys like this analysis, give me a thumbs up. Subscribe to the channel if you haven't already, and thank you for listening. This is Finding Value.